You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means it is time for episode 2 of our doubleheader extravaganza over here on Options Boot Camp, aka OBC. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you of two things. A, make sure you're subscribed to the full network. Otherwise, you're missing out on a whole bunch of awesome stuff. And then B, if you want to enjoy these doubleheaders instantaneously, you want to get access to some awesome pro Q&As, then by all means, head on over to theoptionsinsider.com/pro. That's where you get access to our awesome pro Q&A like we just did earlier this week with our good buddy, Mr. Tony Saliba, as well as, of course, all the other pro Q&As. We've done almost 200. It's wild. As well as, of course, options oddities, giveaways, live streams. You can make fun of Dan live. You can ask questions live, like I'm sure a few of you have on your brains right now, because we've been talking a lot about binaries. And speaking of Mr. Dan, I have unfairly maligned him again, so I should at least toss to him. None other than Dan Passarelli III, Esquire, from Market Taker Mentoring, what the cool kids call to Mr. P, welcome back to the show. Sir, how are things in MTM land?
Hello, Mark. Glad to be back for another episode, and things are going great here. Things are going great.
All right, let's keep on rolling. Let's see if things are going great with the music, because it is time for a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, Dan, we got a lot of people who want to get at us on a lot of topics out here. We have our questions of the week. We have the market taker question of the week. But before we get there, our folks hanging out in the live always get pride of place. We got a lot of thoughts on what we were just talking about, Dan, which is, of course, all things binaries. Are they good? Are they the root of all evil? Let's see, Option God coming in here saying, I'm okay with better wagering products for my use. You know, I understand that. I kind of made that point on the show last week, Dan. If you played around even tangentially with anything, like DraftKings, a FanDuel, any of these big wagering sportsbook type offerings, if you've been a trader for any length of time, you will immediately see the deficiencies. There's no live spread you can hit and lift offers on. You can't exit whenever you want. If you have a trade going your way, Dan, it's up to the complete largesse of the broker whether they want to let you out. They give you a cash out button or they don't. And if the cash out is usually for pennies on the dollar of what it's worth, you have to ride it all the way to completion. If the thing's going against you, they'll let you cash out for, a fraction, a penny, So there's a lot of issues with that. Whereas if there was a liquid marketplace like there are in some of these binaries, if you buy a binary and it's like a 60-70 probability and then the event looks less likely, it drops to a 30 or 40, you can still hit that bid and get out for 35 or 40 cents. So there is some value in that kind of liquid price discovery, being able to access that whenever you want. So I would love to see, even if the wagering platforms don't become the de facto standard and don't partner with CME like they're doing now, I would love to see just better products on their platforms. I would love to see more things that are akin to what we're used to in the financial markets now anyway. I mean, for a while now, some of these platforms have offered quote unquote futures, but they're kind of futures in name only. I think you can only buy them. There's no real liquid market to get out of them. Let's say you buy a future on the Bears winning the Super Bowl. It's really just a plus whatever wager that you have to carry for the entire season. There's no real way to exit it unless you get that magical cash out button that's for pennies on the dollar. So there are a lot of issues with, I think, these platforms that I think it would be better for people as a whole to just offer better products more akin to financial services, whether that means we have to cross the streams or not. I'm still happy with them being separate entities. Sports wagering can be here and financial services can be here, but they could still improve their functionality. Dan, what do you think?
Yeah, but correct me if I'm wrong. I think you said on the last episode that you could bet yes for this and then later bet no. And
you can on some of these, you can buy the other side if you want. It's effectively closing it out.
Yeah.
So so there are spreads there. Yeah.
But interestingly though, I guess you would still have both on until expiration.
Yeah. You'd still be riding it. You're effectively closed out. In fact, that was one of the things, if you noticed, and we pointed this out, I believe, on our election night special last year. If you were trading Kalshi or Forecast, I think definitely Forecast EX, maybe Kalshi, their election night contracts didn't settle until I think it was January 20th, actual inauguration day. Oh. So if you bought a contract thinking you won and got paid out on November 4th, guess what? You had another couple of months of holding period. And if you couldn't get out of that 99-cent bid, you had to ride it for 2 more months to get that extra penny or extra dollar. That's absurd. But obviously they learn from history. They know things can happen in January that could gum up the works a little bit.
I know a guy who owes me money as a result of this.
Oh, would that be the infamous Uncle Mike?
That's right. Oh. Uncle Welcher Mike. I
believe your daily interest rate is 1,000%, again, compounded daily. So he's better get on that. It's getting expensive. All right, let's go out to our chat again. Mr. Unlimited says, I feel like smart people in niche markets can clean house here. I'm waiting for opening weekend estimates so I can piggyback off of Mark. Okay, so we'll get some opening weekend. I'm not sure which markets you're looking for, but I think you're talking some esoteric stuff. He mentions culture things, video game sales, movie ticket sales, sports bettors in non-major markets, Fed decisions. I don't know if that's niche. Fed decisions probably pretty mainstream. But yeah, I used to have a thriving side hustle, Dan, on the trading floor in making futures markets around box office opening weekends. I was the guy. Guys would come to me. I get calls from CME. I get guys coming from all over the SIBO floor. Hey, where are you on Harry Potter opening weekend? And I'd be 80 at 110. They'd be, at 95. And I'd be like 90. I mean, I'd have futures. I had a whole clerk just devoted to it. I had so many futures flying fast and furious. Then I get a call, the phone would ring. Hey, it's my guy in New York. He's like, where are you on Spider-Man right now? So it was a fun. I got to the point where it was kind of lucrative. And I looked at it after I left the SIBO, and I know Cantor Fitz was looking at the Hollywood Stock Exchange around the same time, and the CFTC to shut them down and said, there's so much potential for manipulation. Again, fast forward a decade or two, and now it's all fair game. Everything's trading. Best Picture is trading, Best Actress. All these things that seem very ripe for manipulation are trading on a platform near you. All right, let's keep rolling, Dan. And you know what? Let's just dive right into it. The folks have been waiting for a couple of weeks. They want to get at you. They want a taste of the market taker. Question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
All right, Mr. Dan, what you got for us this week, sir?
All right. I was asked recently, what is arbitrage? And is that something that a regular old retail trader can do? So arbitrage is defined as a riskless profit. And there's a lot of different ways that it can be done. And probably a lot of undiscovered yet ways that it can be done, but it's basically doing something like buying and selling something sort of at the same time, and boom, it's a profit. And is that something a retail trader can do? Yeah, I mean, theoretically it is. I think it's a lot easier for professionals because they have a lot more leverage, and they're probably trained in some of these arbitrage things. Like there's arbitrages with, mergers and acquisitions and spin-offs and lots of different stuff. And this is something that, us mere mortal retail traders can do, but it just takes a lot of homework and probably takes a way to trade it big enough to make money on it. Because if you're getting riskless profit, you're not making 500%, you're probably making 1%. And so you need to have a way to scale that.
Put the whole account through that one ARB opportunity, right, Mr. Dan? The whole kids' college fund. You go big or go home when it comes to ARB, right, Mr. Dan?
Yeah.
Do you want to mention your Substack too while we're here? Or?
Yeah, I mean, somebody did just ask me earlier today, do your Substack posts come out once a week? And I think that's because I missed a week recently. But generally speaking, yes, my Substack on wealth building with options, they do come out once a week, most weeks.
This week notwithstanding, but every other week, usually. And then except when there's a blue moon or a full moon or just any moon. Then they are a little bit delayed out there. Speaking of which, you see all the northern lights around here, Dan? It's supposed to be going crazy. I missed them.
I heard about that, and I think it was last night, and I missed it. I didn't hear about it until I was half asleep last night. But I think they're out tonight. I think.
Yeah, I heard that too. So maybe we'll get a little taste of the old Aurora Borealis down here in Chi-Town, listeners. What are we getting a taste for from you folks right now? Well, we asked you last week. Again, these are kind of wild times. We're vacillating around in the S&P, mostly green. We had a little bit of red on the screen last week, spooked some folks. Back to green this week on the heels of the shutdown, hopefully finally coming to an end out there. So we asked you last week, how are you approaching the S&P 500 right now in your portfolio? Are you still riding the one that brung you to the dance, straight long, SPY or SPX? Are you long but maybe hedged with puts? Are you going the old stock sub route, so you bailed on the underlying, you're just long a call? Or are you dialing back your position or even going to cash? And Dan, it ended up 40.9% of the audience said they're still straight long the S&P 500. And then we had a tie. Well, before we get to the tie for third, let's go number two. Second place, we have 22.7%, Dan, said they are reducing their position or going to cash. And then about 18% each, so pretty much a tie for number three, between they're long but hedging with puts or they've gone straight sub route. So clearly, if you add up the last three I just talked about there, it's over half the audience, roughly 60%, are doing some sort of dialing back or hedging, Dan. So kind of interesting, maybe not surprising given where we are. Maybe it's surprising that still about 41% of the audience is straight long, Dan. What are your thoughts?
Oh, I don't know. I mean, I guess they've been overall right if you're taking the long view, but I mean, we talked about this. I mean, the market by any rational, numerical, calculatable value is overpriced. We would have to have, and and they're pricing in future growth. And I'm not saying they're wrong about that. So, I mean, we've had great earnings, and I don't know, probably will going forward unless it looks like the economy does a whole bunch worse, but we're not going to have good data on that for a couple of months. So, yeah, I don't know. I mean, it's better to be long and wrong than short here, I guess.
Let's see what else our listeners are long and or wrong or potentially right about, what they have on the brain out here, listeners. Let's go to Kyle B. Kyle B wants to know, he says, RE binary options, what we were just talking about. He says, do you have a preference of the penny to $1 or $1 to 100 contracts? I think, Dan, for myself, I think because I cut my teeth on the 1 to 100 binaries, that's just the way I tend to think of them. But do you have a preference, Dan?
I mean, we talked a little bit about this on the last episode. It's probably better for the exchange to do a penny to $1, but I mean, I don't know. I would rather just not fart around with it. I'd rather have 1 to 100 and trade a couple of contracts rather than a couple of hundred contracts.
Yeah, it does seem like they're gaming you for contract size there too, right? You know, if it's $1 and they're charging you $1 a contract, they have an incentive to maybe make them $1 versus 100, right? So there's a little bit of gaming going on there as well. I'm going to do a 10 lot or a 100 lot versus your other ways to price them out here, listeners. So I like the 1 to 100. I think it's just intuitive. It's easy. But if you like slinging a lot of contracts instead, that appeals to you, then maybe the penny to $1 is a way to go. Keep it on the binaries. People have binaries on the brain, Dan. Let's go to Sean Thompson. He says, I've never traded a binary, but color me binary curious. Uh-oh. We've lured him to the dark side, Dan. That probably means a lot of things in today's world versus the early days of the show, binary curious. It's a conversation for another day, Dan. That goes back to my high prevalence on Pornhub. But I would say it would seem a contract that could be, I just broke Dan, he's laughing. It would seem a contract that could be either 0 or 100 would suffer from massive fluctuations towards the close if the contract is around at the money. Is this the case? Yes, you've hit on perhaps the Achilles heel of the binary product. This is from time immemorial. Since binaries were created, I've yet to see anyone really kind of come up with an effective workaround outside of really kind of banning trading in the last few minutes of a contract's lifespan, because that's the definition of the contract, right, Dan? It's 0 or it's 100, or it's 0 or it's $1. And when you're vacillating around the strike right as you're about to go away, guess what? It's 0, it's 100. It's 0, it's 100. It's. I remember the Nadex people complaining to me about this over a decade ago. This is kind of just, unfortunately, it's part of the structure of the product. I've yet to see a effective solution for this outside of, again, maybe reducing last minute trading, which again is not ideal in and of itself. You want to be able to get out whenever you want to, but yeah, this seems like this is just inherent to the product. Dan, what are your thoughts?
I was just kind of musing a little bit about this, especially since I have the Kalshi screen up, and I'm looking at when will the House vote on a government funding bill. And I see that it's got the timer ticking down to expiration, which is in 19 hours, which is tomorrow, if you're listening to this live, November 13th. But one of the ones is before November 14th. And so it appears, unless I'm thinking about this wrong, it appears that it expires before we get that answer, which is not an impossibility, but it kind of turns into like a forward contract.
Yeah, that changes the whole nature of the beast.
Yeah.
So you're locked into whatever you got, a week before? That's wild. So yeah, I don't like that at all. That gets back to the election contracts not expiring until several months after the event itself. I don't like that either. So yeah, I mean the conventional wisdom, and again, Sean, kudos to you for realizing this. This is kind of an issue people have had for a long time, but the conventional wisdom has kind of been like VIX, Dan. It's like if VIX, you're trading VIX, don't hold it through the settlement. Get out of it, close it before then, because the settlement is kind of a crapshoot. The same logic, the same conventional wisdom is always applied to binaries. Get the hell out of Dodge before that final madness can happen and impact you somehow. If you have a thing that's the event is a near certainty and you're at 99 cents going into $1, don't wait for that last penny. Get the hell out of Dodge. Even get out of it 95, 98 cents, whatever it is. Live to fight another day. Don't deal with this nonsense. So, yeah, I think that conventional wisdom applies here too, Dan. Get the hell out of Dodge before you can really be impacted, sir. Do you agree?
Yeah. And I mean, geez, like that's my guidance on any trade, really, right? Like you're trading options, selling options, don't hold it till expiration. Get out before then, because at some point it just makes sense to get out.
Our chat was down with that question about liquidity. Yeah, that's a good question. It's an important one to think about when you're trading binaries. Be prepared. Don't just ride them into the close. Be prepared to get out a little bit earlier here for these products. Also here, a question from JJMT. Danny wants to know, are there actual strikes on event contracts, or is it just the one event itself? Can one binary have multiple different strikes? Well, no, for most of them. I did mention the exception on the last show. That is kind of the exception to this rule. But yeah, a binary is an event, right? Will the event happen, yes or no? So by definition, it's kind of a one strike, one event type contract. Will the S&P close above 7,000 today? Yes or no? Will Bitcoin close below 100K? Yes or no? That is your strike. The event effectively is your strike. The lone exception that I can think of, Dan, are those spreads I just mentioned from Nadex earlier, where now you have knockouts and you have call spreads. So now effectively you do have two strikes. The call spread, I think most of them are on the major indices. So you could have, will the S&P close in this range today, 6,850 to 7,000, and knockouts along those same levels. So you can have multiple strikes on those binaries. To my knowledge, those are really the only spreads that are going on out there, Dan. Are you aware of any other examples of multi-strike binary contracts?
Well, there's not, I mean, by definition, there's not multi-strike binary contracts, but I mean, you do get stuff like, and I'm on just staring at Kalshi right now, like the Running Man Rotten Tomatoes score. Are they remaking the Running Man? I don't know.
Yeah, they're remaking the Running Man. Good old Arnold. They're bringing it back. Not him though, obviously.
No, that was with I was thinking of the Marathon Man.
No, that's a very different movie.
That's a very different
Not a
movie.
lot of dentistry in the Running Man.
Right. Okay. So, but you look at that and there are different contract, like it's above 62, yes or no. Above 65 is a different contract, yes or no. So that's kind of like different strike prices, but I mean, I guess that is different strike prices, right? Because a different strike priced option is a different contract. So, I mean, to me, that's kind of how I think about it as a strike price, is just having different numerical values available. You can't do that with like which college football team is going to win the championship. You can't have strikes on that, but something that has a numerical value, you can, just different contracts at different levels.
I guess I can see what you're putting down there. To me, I think of, Apple options are the product, and then there's myriad strikes within there, right? You got the 200s, the 250s, and those are the different strikes. But the Apple options are, in this case, these are kind of individual products. Well, close above 65%, close above 68%, that kind of thing. But I guess if you want to look at them, the entire gamut of, in your case, the Rotten Tomato scores for Running Man. And you want to look at all of them as one product, and then the different levels are different strikes. I suppose there is an argument to be said for that, Mr. Dan. I might give you that. Generous fellow that I am. I did not think we'd be talking about Running Man. That should be another good flash poll. Running Man versus Marathon Man. That would be and also a good chunk of our audience would be like, what the hell are you talking about? Definitely for Marathon Man. Some of them might have seen Arnold because that's just a fun movie. All these ads for the new Running Man make me want to go watch the old Running Man again. That's a fantastic movie. I love that one. Just very prescient for its age. But that music means we got to get on out of here. Before we do, another question in our chat coming up really quickly. Comes from Option God. He wants to know who owns Nadex now, and it is still Crypto.com. IG owned them. They divested of them back in 2021. I have a feeling, Dan, they probably regret that now. There's a lot you could do with a CFTC-approved binary venue right now that you couldn't do back in 2021. So kind of interesting. Be interesting to see if Crypto.com really takes the bit in its teeth and runs with it. We shall see. And Dan, if folks want to see what you're cooking up over there in the options mecca known as Frankfurt, where should they go? What should they do?
Sure, friends, make your way on. Well, check out my Substack, will ya? It is Wealth Building with Options. And you can just search for, oh my gosh. Wait a minute. Is that
what is going on
there?
What is going on with my camera? It's going crazy. It's breaking on me. What's happening? That's wild. We got all kinds of stuff going on in here. Yeah, this thing it's spun all the way around. Wow. Look at this. This thing is completely broken. What'd you do to my camera, Dan? Are you hijacking it for your own purposes?
So, yeah, Wealth Building with Options. Just go to Substack and search for it. I write some articles that, hey, I think are interesting. So check it out.
There you go. I don't even know what it's showing now. Yeah, this thing's going all kinds of crazy. It is still a work in progress. It has been a work in progress for several years now, but it'll get there someday, Mr. Dan. In the meantime, if you want to get there for yourselves, head on over to tastytrade.com/podcast. That'll get you to all the cool offers they have for the listeners of this show. You know they like you folks here on good old OBC. Check them out. Tell them you heard about them on the show. That'll make them happy, and it goes a long way towards keeping OBC coming at you for another, 13 plus years, however long we've been doing this wild show. So keep it coming. Check them out. Let them know you heard about them from us. And that music means we're done for this week. If you're hanging out in the pro, I'll be back. I see people asking about futures. Yeah, futures coming up right after this show, so we'll get into all the futures fun in a few minutes. If you're hanging out live, just hang out. If you're listening on the on-demand side, hit next. Yet another reason why you should be subscribed to the full network, not just OBC. And then we'll see you back here through our usual array of content throughout the rest of the week until we're back again next Wednesday, another episode of Options Boot Camp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.